Okay, by now you should have your demo account set up. You should have gone through Forex Accelerator in the first half of Investors Bootcamp. You should also be added. You should have clicked on the check your email. You should have a link to the Telegram group. The Telegram group is where you're going to have direct access to me. That's where I'm going to be doing most of the talking, most of the coaching. You can ask your questions there. We're going to be doing some hands-on trading, and that's how you're going to learn. It's going to boost your learning curve. Right now, these PowerPoints, this slide, this presentation is for you to keep and refer back to as you start furthering your knowledge and start learning more and more. But so many people try to get so much into the knowledge part of trading and they can't even trade. Like just because you understand all the terms and you understand all that lollygolly shit, that's not gonna make you any money. So what's gonna make you money is being able to find support and resistance and be able to understand patterns and understand how to read charts. And that comes with time. But in order to be able to be a profitable trader in 7 days, like I've coached people to do, all you have to do is understand price action. You don't need to understand anything else but price action. So we'll talk more about that, but let's get started. So market analysis. There's three types of Forex market analysis. You got technical, fundamental, sentiment. All of these are equally important. That's why you see the stool. If you only know one of them, then you're not going to be a good trader. You know two of them, you might be a decent trader. But if you can get all three together, you'll start making some money. So technical analysis is price movement. As I was saying, you want to look at price action. History repeats itself. So technical analysts use charts because they're the easiest ways to visualize historical data. You can look at past data to help spot trends and patterns, which could help you find some great trading opportunities. So most people that's big on technical analysis, they go look back at like the 1980s, 1990s, the 2000s. They go look at what did gold do, or what did Euro USD do around that time? Because the thing is, there's orders that were never fulfilled in the market. So if something took place, most traders think they're smart. They think, okay, if gold has always historically been low around this time, then it's going to historically be low this next time around, which could be true. But the reason being is a lot of orders didn't get fulfilled. Like when people get stopped out or when there's a big drop in price, there's always still some orders there that didn't get filled. So that's why history tends to repeat itself, because the market makers kind of move the market too fast sometimes and certain orders don't get picked up. Fundamental analysis is next. Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect the supply and demand of an asset. The idea behind this type of analysis is that if a country's current or future economic outlook is good, their currency should strengthen. The better shape a country's economy is, the more foreign business investors will invest in that country. The result in the need to purchase that country's currency to obtain the result this results in the need to purchase that country's currency to attain those assets. So pretty much higher currency value means good economy, lower currency value equals bad economy. So fundamental analysis is pretty much looking at the economy as a whole, like looking at politics, looking at what's going on socially, looking at economics. Sentiment analysis. So the forex market do not simply reflect all the information out there, because traders will all just act the same way. So that's the thing is, every trader has his or own opinion, and they are gonna act a certain way. So if you have a mentor, or even me, I'm gonna see the market a certain way. You're gonna see the market a certain way. Everybody has their own opinion. So people use their opinions to kind of um, verify or validate why they're doing a certain trade. And these thoughts and opinions are called sentiment. So if everybody thinks gold is going to go up, then sentiment would be, well, if everybody's doing this, I'm going to go with the market makers and I'm going to make gold go down, because there's going to be more money to be made with gold going down. It's kind of like gambling. Like if Golden State Warriors are playing the Cavs, and everybody, you see the spread, everybody's betting on the Cavs, then it might just be smart to put a little bet on the Warriors, because the Warriors might win, because there's more money to be made from going with the Warriors. That's just an example. So don't fall in the trap of thinking you're always right or thinking like I believe this, so it has to be this. No, use market sentiment. Say, okay, everybody is betting this is gonna happen. Let me go this way. So support and resistance. This is all you pretty much need to know to really start trading and making some money. Support and resistance is one of the most widely used concepts in forex trading. When the forex market moves up and then pulls back, the highest point reached before it pulled back is now resistance. As the market continues up again, the lowest point reached before it started back is now support. So the easiest way to explain it is you have a ball, you bounce a ball off the floor, that's support. It hits the wall, the top wall, that's the ceiling. So it hits the ceiling, that's resistance, hits the floor, that's support. Everything in the middle is just gray area. The ball sometimes just stays in the middle, and then sometimes it'll slam to the ground. That's support. That's when you buy. And then it'll bounce and hit resistance. That's when you sell. So that's support and resistance. So when you're trying to plot support and resistance on your charts, you're gonna go look at charts, different ones like hourly, 4 hour, pretty much daily is good to stick with. Look at daily and weekly, and just go plot the support zones. Like just look at where the wicks. That's what these lines are here called wicks. So that's where the price wicked, or the shadows, what they call it. So you're gonna find a zone, and you're gonna find another one that it hit the same price. So this would be support because it hit twice. Boom. So you know when it hits this, it bounces. It hits again, I'm gonna get in a buy because I know it's gonna bounce again. But sometimes you could be wrong, and it could crash. So just be careful with that. That's why we have a stop loss. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. So we're not going to be using line charts, so don't worry about that. Line chart is, we use that as our RSI, and I'll talk about that in a few slides. Okay, when the price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When the support or resistance level breaks, the strength of the follow-through moves depend on how strongly the broken support or resistance have been holding. So pretty much to sum that up, if you see here, we had support. This, just practice it like this is your chart. So we're coming down, price drops. Boom, we got support. It bounced, hit the ceiling, resistance, hit the floor again, support, bounced up, resistance, past resistance. So now we're gonna move resistance. Resistance is now here because it kept going, and it's plateaued out here. So this is the next resistance, and then it dropped back down, and it dropped back down. It never hit strong support again. It just kind of came up here. So this is support, and then it came back up. It hit resistance again and came back to now the new support level. And then it kept climbing, and then we hit resistance, support, bounced off the ceiling, bounced off the floor, hit resistance again, didn't break through, tried it again, didn't break through. So this is perfect. If you ever see something like this where you would just put a little shadow right here, it would say this is strong resistance, because it tested it so many times it didn't break. So I would get in a big sell right here, ride it down, hit support, collapse past support, take profit, boom, tried to come back up and hit resistance again, couldn't make it, got even weaker, fell again to a new support, get another buy right here, ride it up, hit resistance again, strong resistance, and then you get in. So this is kind of like how you can, if you can see how easy it is, you don't even have to understand, you don't even have to zoom in on these candlesticks. You just have to be able to follow them, kind of trace them. You know, you trace when you're younger, you just have to kind of trace them and just kind of figure out what's going on. And when you figure something like this, When you see it hit resistance so many times or support so many times, you start realizing, okay, that's a good zone to buy or sell. So trend lines. Trend lines are probably the most common form of technical analysis. In their most basic form, an uptrend line is drawn along the bottom of easily identifiable support areas, the valleys, and in downtrend, the trend line is drawn along the top, easily identifiable resistance areas, the peaks. So pretty much, an uptrend is, let's say you're just drawing your peaks like mountain peaks. You got your resistance, support, and you gotta have at least 3 supports. So you just draw a line under here, and you see like, oh, okay, there's a trend going on. It's going up. And then here you see, oh, resistance, boom, boom, fell again. Oh, resistance, boom, boom, fell again. Resistance, 3 different resistance. But you see there's actually a downtrend going on. Because right here, if it hits resistance again, boom, it's gonna shoot down. So it's good to know about trends, up trends, down trends, so you know when to sell, when to buy. Um, there's also another way to trade, which is called channels, which we'll get into next. So type of trends, you got uptrend, downtrend, sideways trend. So sideways trend you never want to touch. When you see an uptrend, the way you would trade this is you would say, okay, you'll draw a little line right here, and you say, okay, this is support, and then you put another line right here parallel. You say this is resistance. Whenever it's in this zone, I buy, I sell, I buy, I sell. You could purely trade just from trending, just from trends, just from uptrends and downtrends. Don't touch sideways trends, but you see a downtrend, you draw another parallel line, resistance, support, buy, sell, buy. So pretty simple. Like I said, don't try to, put too much into your mind right now. It just comes, it flows over time. You just chart time is what it's called. You need to look at charts, look at charts, look at charts. I'll help you along the way. I'll help you make some money with my personal trades while you're learning, so you can have time to actually figure out the mental part of trading, because most people don't have good habits trading. They start out with bad habits. So I want to help you start good habits, and if you have bad habits, I want to help you unlearn some of those bad habits. So I talked about channels. Um, Channels are just another tool in technical analysis which can be used to determine good places to buy or sell. Both the tops and bottoms of channels represent potential areas of support or resistance. So like I was saying, if you were to draw, if you're looking at this, move the lines out the way. If you're looking at this, you would say, okay, resistance, resistance, resistance. You draw a line up here, you'll say, okay, support, support. So you just draw another line right here that's parallel, and anytime it hits this top line, is resistance, you sell. Anytime it hits this bottom line, you buy. Same thing with this downtrend. Buy, sell, buy, sell, buy, sell, buy, sell. And you can just like kind of see the trends. A lot of people do the trend trading. I do it as well. Pretty much, I just look. I don't trade every day. I have to really see a perfect setup, and the currency that's been showing me the best setup, or the index, is US 30. I usually used to trade USD JPY and gold, but you have to think gold is not gonna move as much all the time because it moves based off the stock market. It moves. USD JPY and gold and yen are all like correlated together. So those, when you're talking about economies and commodities, they move a little slower. So you want to definitely, we're going to be using US 30 during this boot camp because it has the most price action. So indicators, I really don't use a lot of indicators. Only one I use is the RSI, which is relative strength index. You can see that it was developed by Jay Wilder. So it basically helps traders evaluate the strength of the current market. So RSI, it just lets you know when it identifies overbought and oversold conditions in the market. So from a scale of 0 to 100, ours is going to be set to 20 and 80. So usually it's set to 30 and 70, but ours is set to 20 and 80 for a reason. Because if it's at 20, like this is really, really, really oversold. So we're gonna at that point get into a buy. So not to get you all confused, I told you how to set up your relative strength index in Forex Accelerator. And you're just gonna have your numbers 20 at the bottom, 80. 80 is just, think about 80 is your resistance, 20 is your support. Anytime you look on your line chart and you see that it's above the line, that means it's overbought. That means it's getting ready to be a decline. That means you need to be getting ready to sell or get out. Anytime it's oversold, you need to be looking to buy. Simple. If you look here at this example with Euro USD in the 4-hour chart, you will see that boom, 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 had a big drop. You don't know to buy or sell because you really don't know what this looks like. It looks foreign to you. But if you look at your RSI, you see, well, it's way under my oversold line. So I'm going to just get in a buy. And look what it did. It came up, worked its way up. So these are advanced concepts. It is included in your PowerPoint presentation. So I'm not going to go over this stuff because it's way too advanced. Where some of you it's talking about playing the bounce and all that stuff. You don't need to know all that stuff right now. Talking about Japanese candlesticks. You do need to go over the Japanese candlestick that I have in Forex Accelerator though, because you need to know that what the open and close and what the Japanese candlestick means. So if you have more questions about Japanese candlesticks, feel free to ask. And this is just, I included Japanese candlesticks, the book. It's a very expensive book. I gave it to you free. It's actually a $50 book. It's like a textbook. And if you really want to become a master trader, you study those different Japanese candlestick formations and patterns, because that's going to help you read charts. You'll be able to understand a lot more of the charts. And I also included a Japanese candlestick cheat sheet. So yeah, you got everything you need to be successful. Plus you got my help. So I'll see you all in the Telegram group. You should have all made your trades by now, and we'll get going. I'll start critiquing some of you all's trades and answering questions in there. But this is it for the PowerPoints and the slides. You have all of this at your disposal to go back through and look through as you get better with trading and want to further your knowledge.